to go ahead and give you this update on EOS and a couple of other tidbits. Thank you for the birthday cheers, everyone. Much appreciated. Also, too, before we jump in there, let me just mention to you guys that in more of a video format, so this is my first rodeo on Patreon. And Patreon has a feature that you can add to your account that's called Pay Up Front. And I guess I didn't do my due diligence to read that 100%. However, I don't think I would have changed what I did had I read it, but I might have waited a few days to launch the Patreon group. So anyway, but the point is that when you set that feature, it allows people coming into the thread to see everything that's ever been posted. And so that was kind of important. So I picked that, but I didn't really realize that it was going to charge everybody immediately and then charge them again on the first. I thought it would charge everybody again 30 days later. I've spoken to Patreon, asked them for some kind of solution. There's not one. So anyway, my apologies to you guys. But also thank you for the support. Many of you, I'm sure, as you were signing up, realized you would be charged again in 10 or 12 days, and you signed up anyway. So thank you for that. And I just wanted to cover that. I will also put that out in an email to folks. I think that has deterred quite a few people from starting their Patreon with us. But anyway, it was not intentional, and thank you again. So I put out a trade call yesterday on EOS, and I wanted to just cover the chart with you guys right here. I've kind of preliminary drawn in what I sent you guys. But on EOS, we have a very high probability trade here. We are back reaching a fairly good support line here on the daily, which is your blue line. We're also reaching as far back as this trend line here, which I will adjust just a hair, get it right there. And then we also have the apex of our falling wedge here. So as this reaches down here into this, we could see a couple of scenarios. Let me draw those in for you. We could literally touch this point even today. Now let me get the drawing tool going here. There we go. We could literally hit here and bounce out and start up. We could also hit here, bounce up back in, and come back in a little further, and then bounce, like so. But I think that we'll probably hit that area and give a good bounce. Now, we might have a wick effect, and the wick effect would be a candle that ultimately ends like this, and it has a long wick in it, and that wick, could go down pretty good. And if you guys took my education, you know that I'm a big advocate of looking at something and realizing that it can go way further than you expected. So I was first inclined to tell people, hey, we should start buying this somewhere in the 100,000 zone. But then I dropped that back to 97,000, down to 95,000. So really anywhere in here, if you're already holding EOS, certainly you don't feel like you need to add any. EOS is one of those coins that you're going to have an opportunity to do something here you didn't get to do with Ethereum. And so my personal opinion, I don't think that EOS is an Ethereum killer, nor do I even think that EOS long-term will be as grand as Ethereum. Ethereum certainly has their problems, but so does EOS. And I think what we're going to see here is we're going to have easily a 24 to 36 month run overall on EOS. And what you're getting the opportunity to do is buy Ethereum at a much lower price. So many of you didn't get to buy Ethereum at $8. This is your chance. This is your opportunity. Some of these levels that crypto are reaching back to right now, I really believe when we get underway, you'll never see those levels again, or at least not for a very long time. Market cycles and things like this, they all have a memory. And a lot of times you will see something years down the road come back to where it was. But, we're just in the beginning stages of cryptocurrency. So, and keep in mind, guys, that, on EOS, we can have a dump that dumps down into here and then goes up. Okay. We can always get a bigger retracement than we were expecting. Sometimes you can get a full retracement that comes all the way back to here. So when I say to you guys to start scaling in, your first order shouldn't be your biggest. Your last order should be your biggest order. So for example, if you were going to put $1,000 on a trade like this, you would maybe put a couple $100s in at the first and then let it drop another, 100,000 or another 10,000 Satoshis or 2 or 3,000 Satoshis, whichever the setup is for you, and add another couple $100. And that process works far greater than trying to pick the exact bottom or the exact top. And you get out of a currency the same way. I started selling off EOS the first time, like maybe on this candle here, and then sold off some more here. Then we had this retrace and came back up to test, and I sold off more here. Then it came down. I started buying, you see this big volume candle here, the red one? I started buying EOS again there. And then I bought again in a couple of days, and I bought again in a couple of days. And then, we reached these bottoms right here, these lows. And that's when we took off. And when we came up the next time, I started selling EOS maybe on this top green candle here, and then sold the next day some more, sold the next day some more. And so to me, scaling in and out works so much better than trying to get that exact bottom or that exact top, because sometimes the price will just take off on you. And then sometimes you'll go to bed at night and the next day you wake up and it's dumped a lot more than you thought. And you go, gee, man, this is really on sale today. And so you buy a little more. But what you don't do is you don't look at it and go, man, gee, this thing went past the support line and it really dumped hard. And you say, I'm just not going to buy any. That's what you don't do. Because not buying any puts you back in the mode of buying the highs and selling the lows. And guys, what we do is we buy the fear. When that big red candle comes out the bottom and you feel fearful, that is the time for you to start buying. The most powerful people on the planet that invest in everything, they only invest when there's blood on the street. That's the only time they invest. They don't wait till they see big green candles to invest. So I'm encouraging you guys to not be bothered by that. I don't put my money in any project I don't really believe in. So I'm okay with it. If it falls further, it falls further. If my analysis was wrong, it was wrong. If there's something going on I can't control, some kind of FUD, some kind of news, some kind of whatever comes out that I can't control, I don't worry about that because I don't have my money in any cryptocurrency that I don't believe in. Not only that, but most of the cryptocurrencies I'm taking trades on, I've already taken many trades on, and I'm on house money. You should be on house money too. So if you put $1,000 in this trade, for example, your risk reward here is pretty doggone good. But if you put $1,000 in this trade and you lose the $1,000, you should have already made thousands of dollars on EOS, even if you were just trading with a couple of hundred, because the first run on EOS was 4,000%, 4,000%, or 3,700, roughly 50 cents up to 1961. So, I mean, it was a lot. It was a lot of percentage. And then we had another big run from here to here. Nowhere near the percentage wise as we had here, but still a very, very good run. So anyway, that's kind of where I'm at on EOS, and that's kind of what I wanted to share with you guys. As far as targets on this, I would say that if you're wanting to just take a quick profit out of this, which I'm not, I'm wanting to be involved in it when we come up for our next run. But let's just say we end there. I think that 100, I think that 170,000 is probably pretty good. Probably pretty good if you just wanted to take a profit. I personally am looking at a new high on EOS, and I'm adding my position for a new high. So that's what I'm doing on mine. I'm just adding for a new high. Now, I'm heavy. I'm very, very heavy. And so when we get to that 170,000, which is basically 50%, so 50% of the fall. So we fell from here to here, and you may have to readjust that because we may fall from here to there. Okay, but when you get that push that goes up through the 50%, I may take right there. I may take and dump enough of the EOS that I'm in to get all of my capital back. So now what I leave in is just house money. And then I could go to the new high. Okay. EOS is a very high market cap with lots of liquidity coin. So I'm quite fine being heavy on EOS. It hasn't triggered my first buy yet, in case you're wondering. And I have buys stacked all the way down to 93,000 in fact. So we'll see what happens, as we continue to fall down here. But I do believe that this is a very high probability trade, and I also think that in general, the crypto market is potentially making its turnaround. Potentially. So don't run out of here and go, oh, Jay says it's made the turnaround. Potentially making its turnaround. As I am big time a bull as long as we're staying above that $5,800 to $6,000 mark. But if we go below that, then I have to ride like you do. I'm not the guy that runs in here and says, oh, I'm going to sell off all my positions. I just can't do it to begin with. The market would tank big time if I started selling everything off. So I can't do that. You certainly can if you want. But I believe in every single project that I'm in. I don't believe crypto is going to zero. I believe crypto is going to hero. In fact, I believe that we're about to see the biggest bull rally in crypto that we've seen yet. So, the first target would be, if you want to maybe take your initial profits out, would be here at the 50% line. So draw your fib up from the top to the bottom. The other thing would be, you could maybe push it a little bit up to the 618 for your first spot. A lot of times when you see a drop like this and then a bounce, you'll at least get to 50% first. Okay, but remember this: once you go above the 0.382, that typically means you're not going to come back below that much. So when you take off from the bottom and you break through the 0.382, and maybe you hit 50 and then bounce back down and test that and go up again, that typically creates the actual return in price that you're looking for. EOS moves on its own. It's not really moving in conjunction with Bitcoin. So keep that in mind. It literally, Bitcoin can go up and EOS goes up. Bitcoin can go down and EOS goes up. So it does its own thing. And I kind of like that. I can't wait till more cryptocurrencies are doing their own thing and they're not all moving in sympathy of Bitcoin. All right, let's take a look at Bitcoin. That gives you guys a little bit of an understanding there on what I'm looking at for EOS. And we'll continue to cover that trade as we go and as it takes place. Wow, look at Bitcoin. My. Nice melt up effect. Let's see if we can find my other chart here. Okay. So we'll go with this one here. We'll get rid of a couple of these drawing tools. Let's see how quickly this happened real quick here. Let's go to a 15-minute chart. Oh yeah. Oh yeah. This is why, guys, one of the reasons why I tell you guys that you should scale in and out of your cryptocurrencies, because you can never anticipate a movement like that right there. That's 45 minutes. You're at work, you're on your lunch break, you're out to a date with your wife, you're at church, whatever, and all of a sudden it just skyrockets, and you were waiting on the perfect entry. And then it does this, and then it does this, and then it does this. Cryptocurrency, if you look at the daily charts, you don't get that many days that it goes crazy. So it's something to truly consider when you're thinking, man, I've really got to catch that exact bottom and that exact top. Not really. Not really, you don't. So let's take a look here and see. By the way, Bitcoin is starting to outperform. And man, that is exactly what we're looking for. Let's drill this down from a monthly time frame. Yeah, this will be perfect. Absolutely perfect. Bring that up here. Wow, that's from way back when. Get rid of all these. And I want to add something here. So, you guys know I originally had this line here was my $1,200 line. This goes on the monthly chart, which is the granddaddy of all charts. We'd come up, we touched it, we based under it for months and months and months, and we took off. And this started our bull market. On this monthly, the first thing I want you guys to notice is we have an incredibly bullish engulfing candle. Now, the month's not over yet, but we are getting to the end of the month. And so if we can hold this or even higher, this is going to look fantastic as far as a bullish engulfing candle. We're totally engulfing candle before it. Let me blow that out a little bit more for you guys. So right there. And then what I want to do is I want to add, as a trader, when you're looking at a monthly chart, one of the things that really, really matters is the moving average. So let's see what we got here. I wanted to kind of do these live for you guys, and so you can see me plot these things. So I might be a little convoluted as I'm trying to navigate the computer as well. But yeah, let's change this to a 21. What matters really a whole lot on a and maybe we need to make that exponential as well. Off the close style. Let's go in and do this in exponential. There we go. So an exponential 21 moving average on the monthly is kind of the granddaddy of all indicators. Because remember, the monthly chart moves extremely slow. You've got 29, 28, 31 days roughly, anywhere in there to create a candle. So it moves very, very slow. So a lot of big wigs on Wall Street, when they're looking at the monthly charts, they do follow big time the 21 moving average. And in many, many cases, you're going to see them use the EMA, the exponential moving average. And I'm going to make that just a hair bigger for you guys to see. Maybe change the color on it. There we go. So you can see, guys, we came straight down off of our $20,000 highs and we touched the monthly 21 moving average. And we've held. We didn't even so much as go really $1 below it. From there, we just bounced. That is a huge, huge bullish sign on the monthly chart. So that's our monthly. Let's go with, let's drill it down a little more to our weekly. Okay, so here's our weekly. We are just now breaking back through the 21 on the weekly. Again, the 21 is not as important here on this one. What you're going to want to start to look at is more of a 50 moving average on the weekly. Okay, because now you have a candle that's moving a little faster, only takes 7 days to produce. However, on this weekly chart, one of the things that I pointed out a couple weeks ago in our trade call group is right here, we had a perfect tweezer bottom. So you'll notice the wick that comes off. We blow it up just a little bit for you guys. You'll notice right here, well, that's not what I wanted to do. Go back there. You'll notice right here, let me put the drawing tool to an arrow. Right there. You'll notice here and here. So I'm pointing at these two candles, the red one and the green one. And on the bottom, you have these little wicks hanging off the bottom. And those wicks are perfectly lined up. Those are called a tweezer bottom. And when you've been in a downtrend or a correction for, gosh, 6 months, 7 months, you're looking for a major reversal sign. And a tweezer bottom or a tweezer top is a big time sign for you. You can't look at it, you can't look right here and try to find a tweezer top or tweezer bottom. You could look here, you can look down here, you could have possibly found one over here, but it's one of those things you're looking for at the end of a trend. And this was perfect. I pointed this out in our trade call group just a couple of weeks ago, that we had a perfect tweezer bottom on the weekly chart. So away we go. Away we go. This is looking fantastic. So we are, as of right now on the daily, let's go to the daily since we're drilling this down, and we'll get rid of these drawing tools. We are essentially breaking 7,800 on today's candle, but remember, today's candle has to close. Today's candle has to close, and what we want is we want it to close strong. Let's add some volume here. Well, that was one of the things I wanted to point out to you guys back on EOS was the volume. Take a notice and look at this on EOS. We'll get stuff out of the price. What do we have happening right here? We'll start from even that top candle. You remember what I taught you guys in the volume class? In the volume class, I said to you guys, when you have price going down on less and less and less volume, that's bullish. When you have price going up on less and less volume, that's bearish. Okay, so as we climbed this right here, this was actually, the volume was going up. So volume was bullish along with the price. But in this case, we have the price coming back, and we're coming back on less and less volume. That's a very, very bullish sign. So I meant to cover that with you guys. I just wanted to share that with you. All right. So here, what I want to point out on the daily chart, is I want to point out to you guys a different indicator. Let's just change this yellow one here. And let's go to the 200-day. So right here, for the first time, we have the price coming back above the 200-day since April. The 200-day is very, very important because see how the price has held the 200-day in our bull run? So not only do we want to break the 200-day, we also want to break our trend, which is here, which we're doing today. This is fantastic. I told you guys here a few days ago that what we're looking for is we're looking for a break of the trend, a break of 7,800. We're looking for a big break, but we want to do it on good volume. Well, we are not that far into today, and the volume's looking good. So if this continues through today, and we get a break of volume as well on the trend for volume, we can take and look at our trend on volume here. There's a few others down there that you can place, across here. But what we're looking for, this red line, I have this red line drawn in here as well, because it represents also the average daily volume. So we want to start seeing volume candles here and there that go above the average daily. And we could probably move that down a hair, somewhere into here. So we're just about to reach kind of the average daily volume. And we're breaking the 200. You guys might want to look up, give you guys a tip here. Look up Trace Myers. He is a Bitcoin maximalist. And he has something called the Mayer multiple. And the Mayer multiple has proven to be correct time and time and time again. Time and time and time again. Now, I do want to point out to you guys, if we broke, I personally was looking for us to go to around 85, 8,600, and then create a little bit bigger head and shoulders. So let me draw that in for you guys. A lot of people were calling for this head and shoulders. So there's shoulder left, there's your head, shoulder right. Okay, no problem. I can get on board with that. But let's take a look. Okay, come on. Let's take a look at a little bit bigger head and shoulders. So imagine this right here comes down to create a shoulder. Okay? And this right here, this whole area right here is a head. And now we still have to create another shoulder over here. So I'm anticipating probably, let's put a line in there for you guys. I'm anticipating probably us reaching up to about here. Probably about there. And then starting to create that next shoulder, which by the way will also be a retest of our trend line. If you guys watch my trend line video, I've talked about the fact that 90+% of the time we're going to break like this, and then we're going to come down and we're going to test the trend line like so. And so, of course, when we do all this, the whole world will be going, see, we told you it's still a bearish market, blah, 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 blah. But in the end, you're going to end up having a neckline here. If this plays out, this doesn't have to play out. This thing could skyrocket, guys. I've been talking to you for months about the potential melt-up effect. And this thing can absolutely skyrocket. You guys know what Bitcoin can do when it gets into a market. So let's just assume for a minute this plays out so you guys have something to look for. We come up into here, we pull back, we do another shoulder. It creates a neckline. That's our neckline. Well, that neckline is let's just call it 8,700 down to 5,700. So that's $3,000. Okay. So that puts our next target when we break that to the upside at 11.7. Oh, isn't that interesting? A number I've talked about for months, 11.7. I kept saying, we got to break 11.7. We got to break 11.7. So it would look a lot like this. So we come up here, we come down here, we make the next left shoulder, and then we make some type of impulsive move up like so. It takes us to 11,000. And what is that? That is way too far out. So it would probably happen a lot faster. I'm anticipating seeing something like that by easily into August. Easily into August. So, and that would certainly, I also think too, when we break $10,000 on Bitcoin again, when we break it again, when I use the term break, and I'll reiterate this a couple times over the next videos and then I'll stop reiterating it. When I use the term break, I really am talking about a solid break with good volume, a retest, and then a follow-through day. A follow-through day. That's breaking, and that's confirmation. But, Bitcoin is starting to outperform. And I mean, some of these moves up are outperforming any of these other things we had back here. Okay, we're breaking through patterns. This is looking fantastic. So we'll just keep an eye on this and see how it plays out. But look for that bigger head and shoulders right there. Just look for it. It could come up here and do a 1, 2, 3 days down and rest a little bit. Because keep in mind, we have not rested on Bitcoin since Bitcoin left $6,000. So we reached this line, we would have had a $2,700 run. So this is great. And guys, don't be afraid to, you can bet when we get to some of these key levels, I'll take profits. I will take the profit, I'll take the cash, I'll put it on the sideline. One of the videos I'm going to be doing for you in a couple of days is a video where I explain the network effect on your portfolio. And I'm going to go into depth with it. And when I explain this to you guys are going to go, wow, this is how we create a money machine. See, guys, it's not, some people say in trading, they say it's not how much you make, it's how much you keep. I'm going to go a step further. It's not how much you make in trading in regards to the binge team, right? So it's one thing to get yourself free and get out of debt and get to where you no longer have to have a job. It's something totally separate to stay there. So along the same lines of it's not how much you make, it's how much you keep. It's not that you get free and you no longer have a job. It's that you stay that way the rest of your life. And I want to teach you guys the process. And we've never had a market we could do this in. We now have a market that we can have this network effect. It's going to be phenomenal. Going to be absolutely phenomenal. So anyway, that's kind of Bitcoin for today. While we're at it, let's just go ahead real quick and take a quick glance at Ethereum and Litecoin. Okay. Like that pop-up effect. So with Ethereum, we had, just like Bitcoin, we had a little bit of a blowover. Get rid of that. Come back to our trend line. Jeez. Really? We had a little bit of blowover where we came down below. I call them false breaks. We also had an almost complete retracement here to there. So we went to the 0.883. I normally have this set up as a 0.886, but it's okay. So notice how this move up and now back to our big trend line, as well as the 0.883, is the exact same setup we're looking at on the OS right now. Exact same setup. And so here we're starting to bounce a little bit. If we get a break on Ethereum, Ethereum could potentially drop maybe down towards where it came from into the 360s. And if it does, I'll transfer some more Bitcoin. I'll transfer some more Bitcoin into Ethereum. We're going to start to see Ethereum move on its own. Here's your weekly. Let me blow that up a little bit. And let's get rid of all of our colors. We don't need those anymore. So we had a couple of pretty big reversal signs. We had this spinning top here, the red one. It would have been more ideal if it was green. And then also here at the very bottom of this trend on a weekly, we have an inverted hammer. So an inverted hammer at the bottom of a downtrend is a pretty good reversal sign, especially on the weekly. And what were we doing again? We were not only coming back to potentially test these highs over here. We'll just draw that line there. So you see where we had a touch here, a touch here, a touch here, a touch there, a touch there, and then of course these came down right here. And we made this nice little pattern here too on the weekly, which I always look for, where you have a wick that's higher, a wick that's lower, and a wick that's higher. So this is probably a nice turnaround point too on Ethereum, which certainly makes sense because of what we're seeing in Bitcoin. And then the next move on Ethereum can absolutely be a monster. One of the reasons why I transferred a lot of Bitcoin into Ethereum is because I see way, way, way bigger targets percentage-wise for Ethereum this year than I do Bitcoin. For example, if Bitcoin could make it to 100 to 115,000 this year, we're talking about a 13, 14x roughly, right? But Ethereum could go, Ethereum could go from where it's at right now to 20,000. It really could. And so you could have a 3,000 or 4,000% move. Same thing with Litecoin. So I don't want to have a ton of my money sitting around in Bitcoin. So I've reduced my position in Bitcoin. And in essence, guys, it's still Bitcoin, okay? All roads lead back to Bitcoin. So somewhere down the road, when I decide to convert back, I go back to Bitcoin and have a whole lot more Bitcoin at whatever the price is. Or I convert right out to cash and then come back into Bitcoin or Ethereum when it's lower. But these coins, these high market cap coins, like for example with Ethereum and Bitcoin and Litecoin, let's just take Bitcoin, put it in a class of its own. You're going to start seeing less and less of a percentage gain each year. So last year we had 33%. This year we might have, say, half of that, maybe 1,500% return. Not that that's bad. My goodness, I'd take it all day. But if you have another coin like Litecoin or Ethereum, where you could get 2,000, 3,000, 4,000%, that's really where I want to focus my energy. And then from there, we're going to go to the next set of coins. So we'll take a look at Litecoin quickly. Again, these all are kind of set up just like Bitcoin. Yeah, so Litecoin did the same thing. We had this blowover effect where it came down below its trend line. Let's blow this up a little bit first. And we'll readjust this now. We'll pick that wick and pick up and line it up with that wick there. And so that gives you what you're looking for. And again, you have the same exact thing here with Litecoin. You have, well, it's up a hair so you can see it a little better. Here at the very bottom of all these weeks, you got this little spinning top, almost like a spinning top doji, and you have two inverted hammers. Two. When you have an inverted hammer at the bottom of a downtrend, it's no different than having a hammer, what they call a hangman, at the top of an uptrend. That is a huge reversal sign. And on the weekly chart, not the daily, but the weekly, you had a huge inverted hammer here. Two of them. Back to back. So that's pretty good. But again, if all crypto space gets to going, we're on our way anyway. Doesn't really matter. Let's use the arrow again. Check out your volume. Here we are with decreasing volume on the weekly and the price going down. That's a bullish sign. It's a big, big, big bullish sign. Let's see exactly where we got to in support and resistance as well. Yeah, so we came right down in here. And this old top right here that we had, where these two candles started and stopped, every weekly candle we've had 1, 2, 3, 4, 5, 6 weeks has basically held that. That held that $7,500 to $80 range. So it has proven to be the new support. When you have 6 weeks that hold up there, away we go. And guys, you got a lot of space between here and the old high. And look, I know when you look at the chart like this, it looks like, wow, way up there. However, draw it down. Draw it down like this. And you'll understand that on the next move for Litecoin, when we rock it out of here, okay, and we do like this, all of a sudden that old move that looked so big is a blip on the screen. It's just a little blip on the screen. So look for that. I'm anticipating Litecoin, obviously with what has happened this first part of the year, I'm no longer looking at the targets I had for Litecoin coming into the year. But I still think over 5, maybe as much as $8,000 this year on Litecoin. And I'd love for Litecoin to surprise me and go to 10. I had emails from people today telling me that if Litecoin will go over $2,500, then they're free. Man, that excites me. Also, too, real quick before we close this morning update out, I had someone ask me about why we're looking at EOS and we're looking at the Satoshi level. Well, on most cryptocurrency for right now, on most cryptocurrency, we have it's all purchased with Bitcoin. Well, being that it's purchased with Bitcoin means that it's best when you're calling it on a chart to call it by the Satoshi level. So over here is your Satoshis, and it's best to call it by the Satoshi level than by the USD level. Okay? Now, guys, do keep in mind on EOS, if EOS breaks out of this pattern and comes down and tests it, all bets are off on getting down to 9,500. Just start buying. I mean, you're only talking about probably the difference of 30 or 40 cents. And you can bet if we see this break out and come above our pattern and we come back down and test, you can bet I'll be buying. So it won't be a missed trade, it'll just be a re-engineered trade, okay? So don't miss your trades. But just keep an eye on it. There's no emergencies. It'll always be here. I mean, I never get upset. Even if it broke out, came up, retested, and started up again, I'll buy it right up in here. I am not fussed about it. But just keep an eye on it and have yourself a backup plan so that you can do one of several scenarios. All right, guys, more videos to come. I am home now, and so little by little, I am going to start making a video where I cover 2 or 3 coins per day. What I may do is I may alternate, and I may come in and show you guys, say, 3 coins tomorrow that are some of the new ones I'm looking at and looking at adding, and the different levels I'm looking at adding at. And then the next day, I may take and do 3 coins that we do a review on that we've already been in for months and months and months, or it's just part of my portfolio. And that way it gives everybody an update of where we're at. In the meantime, we'll keep an eye on Bitcoin, Litecoin, Ethereum, and also next time on, we'll do some Bitcoin Cash. But just to understand, Bitcoin Cash is going to go up every time Bitcoin does. It's just going to go up more percentage than Bitcoin does. So I also mentioned before we started the Patreon, when we were in the trade call group, that I have purchased a lot of Bitcoin Cash in the down market. A lot of Bitcoin Cash. All right, guys, have a wonderful, wonderful day. I will be talking to you again real soon.